welcome. Welcome to this session on ESG investing, or green investing, sustainable investing. I think there's a lot of ways to go about it, but pretty much all means the same thing. And I think maybe to start us off, I want to take a little, I guess, sort of us a few decades back and talk about the movement of ESG investing a little bit, because it was kind of a movement with a rise and fall, where I guess the first decade or so, last decade, that it became popular, it actually was on the rise and it became more popular. Many companies started to see the benefits of investing and also complying to ESG standards. But in the past years, we've seen a bit of a backlash, mainly in the US. So maybe to start with Rhea, like, what's your take on that? What is going on and why all of a sudden this sort of turn towards ESG investing?
Yeah, well, first of all, thank you for having me here today. It's a real pleasure, and I may be one of the few out there, the dinosaurs in this area. I've been investing in climate sustainability for well over 2 decades, so I have seen the rise and fall of this particular industry. And we are seeing a significant pickup right now over the last years in particular, as corporates are setting new targets and people are really thinking about regulatory requirements that are coming in around reporting. And there is a bit of a difference that we see across both sides of the Atlantic, what's happening in North America, what's happening in Europe. And what I would say is that there's definitely been more backlash in North America, in particular in the US, around reporting standards. And really, I would say, one of the fundamental reasons why is there's been such a difference in how things have been reported. Everyone had their own way, their own standard. There was no standardization across how we were doing it. And what that resulted in is many people reporting, in a very light way, which ultimately came back as greenwashing. I think what you're seeing now in the market, where a lot more discussion on the regulatory side, is this standardization. I think by the end of the next decade, we are going to see, touching almost every corporation out there, that you will have to report in one way or another on the sustainability. And that is really, from an international perspective, coming together to be more standardized. And even in the US, where we are seeing a bit more backlash, just recently, if you've seen in the news, California has done a first of its kind and come out and is now putting in an act in place, and that up to 2026, companies over $1 billion in annual revenues will be having to report out up to Scope 3 emissions, which is very bold for California. And what that means is, obviously, we're going to be looking at ways to make sure we're standardizing how everything is going to be reported, in particular Scope 3, which is a big topic of discussion.
Yes, definitely. And I think one other issue is also that it's becoming more heavily politicized, I guess, in the US, where I guess right-wing politicians see it, well, there's like the idea of woke washing, basically aligning the idea of ESG investing with, being anti-cars, for example, or like the fossil industry. And to what extent do you see that developing, or in what direction do you see that developing in the US?
Yeah, I think right now people are looking at this as not just a way of, okay, I'm going to have to be compliant. They're looking at this as, well, actually, what is this reporting going to be able to do to help my businesses? Because ultimately, businesses have been really trying to get more transparency. For example, through the supply chain, it's been very difficult to get that transparency. And in many cases, it's sort of putting it on its head and saying, well, actually, this data is going to be helpful. It's actually giving me a view of how I can better operate my business. And I think there's a real opportunity there that will come out of this going forward.
Yeah, so I guess one big issue has to do with the metrics, the transparency around it, and greenwashing, I guess, as a result. And maybe to go to the corporate sustainability reporting directive that is coming in Europe, and go to Julien, do you think that might actually offer a solution to all these issues that we're currently dealing with when it comes to ESG investing?
First of all, I would like to thank you. I'm very, very pleased to be with you today. I'm very pleased to share this panel with Rhea. And thank you, Anouk, for monitoring this panel. I'm fully aligned with Rhea. I think, as previously a minister in the French government, I'm sure that the politician issue is a big one. And for sure, at the political level, you need to set up a framework, and within the framework, to give some clarity to all the investors and all the corporates. But if you put this framework on the side, what is the most important issue is transparency. When you are speaking about greenwashing, when you are speaking about an investor investing in a company, when you are speaking about a big account working with many companies all among the supply chain, everything is a matter of transparency. Can you be confident with the ESG or carbon data that the supplier is giving to you, that the investees is giving to the investor? And on top of that, the new coming regulation, at least at the EU level, will force every company to disclose auditable data. So everything is a matter of transparency. And that's why, after my political life, I have decided to join a company. The name of the company is SWEEP, S-W-E-E-P. Booth 52, if you want to have a look at it. And what is the purpose of this company is to have a kind of platform, all-in-one platform to monitor, collect, assess all the ESG data, but with one specificity, which is the auditability of the data. If you are a big account and you are working with suppliers, you need to be sure that all the ESG and carbon data that these suppliers are giving to you are totally trustful. And tomorrow, if you want to avoid the greenwashing, the only way, because the consumers, I mean people, citizens, they are asking for this transparency. If you want to avoid any greenwashing, the only way to do it is to disclose and publish data regarding your own ESG and carbon reduction policy, but you will be challenged regarding this data. So if you are not able to give piece of evidence regarding the nature, the way you have calculated this data and the auditability of this data, it will not work. So you need to implement in your whole company, in the private equity firms, in the big account, in the corporate, you need to build something, a tool, a solution, something, to collect this data, to disclose this data, but to be able to be challenged. And then if you are challenged, you will have the solution to show exactly what is your ESG policy. So everything will be a matter of transparency, first coming from the consumer, and we need not to forget it, then coming from your clients, and then when you are a big account, you need to have exactly the same transparency all among your supply chain. That's why you need to collect this data.
Yeah, got it. And so obviously this is a heavy governmental regulation. It's basically the government saying to companies, bigger companies, this is how you should report, this is what you should do. To what extent do you think, maybe a question for Rhea, how can companies easily adapt to this basically new reality?
That's a great question, because I think, from our perspective, we do a few things that's quite important to be able to make sure we have the underlying emissions, because this is, for us, we're really looking at carbon emissions. It's a key important part of what we do. And I would say there's sort of three things that are very critical. And maybe I should just say, put in perspective in terms of the size of funds that we're managing. So I work for General Atlantic. We have over 75 billion assets under management. We have 3.5 billion just allocated to this specific area of climate sustainability. And for us, we cannot risk having greenwashing or putting numbers out there that don't make any sense. So when we set up the fund in 2021, we did three things. One was that we do a very, very detailed emission reduction potential calculation. We have a third party, it's a firm Systemic we work with at arm's length. They write a 90-page report on looking at the life cycle analysis of companies and if they truly are being able to reduce emissions, or we're not just offsetting emissions over here and we're creating incredible issues elsewhere down the value chain. The other thing that we do is we ask all companies to sign up to science-based targets. There is a methodology around how you do this that's out there, and we help companies go on that path so that they themselves can get to net zero. And on an annual basis, we monitor that. And the last thing we do, which I think is also very important, as a fund in Europe, We are an Article 9 fund. I don't know if people know exactly what that is, but under SFDR, which is the financial regulatory framework, we need to report out, let's say, gold standard across ESG, very specific factors that get reported out publicly and transparently. And I think this is very important steps that we've taken as a fund to be able to get down to the point of what steps can you take to make sure that you're not greenwashing, that you can get down to the numbers, you're transparent about those numbers. And so our investors and the companies that we invest in, it's very clear on what we're doing to protect the environment.
Yeah, but because do you have an example of a company that you went into the process with and at some point decided, okay, actually this company doesn't make the cut for us or doesn't meet the criteria that we have?
We have. The way our investment process works is that obviously we have many opportunities that come through our pipeline. Very early on in that process, we do a typical review, obviously looking at sort of the financial, commercial, the management, but we have a very specific point around climate and emissions. And if it doesn't meet that review, it gets thrown out very early on in our investment process. So it is one of the key factors that we have that ultimately will make a decision on whether we can invest.
So ESG investing actually stands for environmental, social, and governance. I read an article in The Economist, I think it was published last year, where they argued maybe just forget about the S and the G. Let's just only focus on the environment because it's easier. We can just measure carbon emissions. Maybe I see Julien already shaking his head. How do you feel about that statement?
No, definitely I don't agree with that. But what is the most important point? Rhea, is one of the representatives of the financial sector. And what is the main message coming from Rhea is that now the investor and all the financial sector, they take care of ESG figures. What does it mean? It means that each time you want to raise additional funds, it will not be possible tomorrow if you are not compliant with some ESG criteria. And it's a very important milestone. It means that when you are assessing the value of a company, so far the value was only based on revenue. Tomorrow it will be based on financial revenue plus no financial figures. But the only way to do that is to have this auditable data and then to let you able to provide to your investor with this data. But for me, it's a very important milestone. I used to be a minister, and when I was a minister, I have seen how it could be difficult to make changes. And we know how we need to make changes, especially in the field of the environment. And when the financial sector is fully committed to make this kind of change, then things are going very, very quickly. The point is that today the regulation, it's not only because Rhea is a superwoman or Rhea is very, very committed, it's also because the regulation today on the financial part is asking for any private equity firms, any asset manager to have this kind of disclosure regarding the ESG figures. But it's a very, very good point to have this regulation imposing and forcing the private sector, the private equity sector and the asset manager to do so. But what will be the consequences? All the pressure coming on the shoulders of the financial sector will be conveyed, will be forward to the corporate teams. And for the procurement manager that you are, never forget that, roughly speaking, between 80 to 90% of the carbon emission of your own company is coming from the procurement side, is coming from the suppliers. But the data regarding your supplier will be asked by Rhea and the colleague of Rhea the day you want to make the value of your company. This is a huge change in everything today in the market, and we have to take it into consideration. I spoke a lot about carbon and environmental issue. Biodiversity will be the next step, but for sure, social and governance will be a lot impacted by that, especially the governance, because we estimate that in a couple of years, less than 3 years, before 3 years, you will have in every corporate to change your own governance, because the no financial figures, the extra financial figures will become as important as the financial figures. So then you will have to make a new governance to disclose these figures and to be able to be assessed on and evaluate on those figures.
Yeah, I think it's an interesting point. And also when we were preparing for this talk today, you mentioned that procurement professionals, which is obviously a lot of people here today, don't often see their role in this bigger mission, or they're definitely interested in maybe learning more about ESG and don't really see how their particular job or their role can fit into that. So of course we just talked about it before, but what exactly is it that they can do to also be part to contribute there and make sure that they are part of this bigger mission that doesn't just involve investment and regulation, but also procurement in this sense?
But actually, what is the state of play? And we can observe it every day. The state of play is that if we don't have big changes in our day-to-day market practices, then we will not be able to tackle the climate change. So we have to make these changes. Most of the time, we are waiting for the politician to do it. It's very important to have very committed politicians, especially at the EU level or in the US, to have the big framework. Rhea spoke about the SFDR. Tomorrow, at the EU level, you will have the CSRD. CSRD, it's more than 900 metrics that every corporate, more than 250 employees, so every corporate, they will have to populate, to disclose in an auditable way. So that's why you will have to implement in your own company tools like we've got at Sweep or coming from our competitors. The second origin of the changes, they are the customer and the client. We spoke about the greenwashing. But the last point, very important for me, it's the changes coming from the big account, and especially coming from the procurement department. The day when the procurement department decides to change the criteria when they make when they do the procurement, in details, it means to put some environmental criteria in any RFP to choose your suppliers. The day when a big account is doing that, then the impact is absolutely massive. And so I am very optimistic on that, because I think when you see that today in this procurement day, you have so many companies proposing solutions on carbon, on environmental issues, it means that all the procurement guys you are totally committed to that. And if it's not the case, the regulation will force you to be committed. But what is optimistic is, I think you've got in your hand a very powerful impact, possible impact. So let's make it real.
Wow. A lovely manifest. So that was the procurement perspective. Rhea, I also want to talk a bit more about the investor's perspective. As Julien mentioned before, obviously your company is well, that's your core business, focusing on companies that solve climate change in one way or the other, but that's not the case for obviously every investment fund and every investor. I guess maybe starting question here is why not? Why wouldn't investors be focused on ESG investing? Like what's the downside?
What's the downside? To be honest, I don't see the downside, and I'm not biased. I think part of the reason is this, and I think Julien talked a lot about the regulatory side. The regulatory side is coming. I see it as the stick coming to people are going to have to report out. But there's another side of this, and as an investor, we're always looking for areas where we see significant growth, where we're going to see significant value add for these companies that we're looking to invest in. Supply chain was one of the big themes that we went after when we started the fund, partly because the emissions, it's a significant amount of emissions that you can tackle by addressing supply chain, but also by enhancing the efficiencies of your supply chain. It's just better for your bottom line, right? Let's be honest, if you can take out cost, waste, etc. from your supply chain, you're going to have a better business. We invested in another company, in a company called 09 that essentially will do, it's a digital solution that will map out your supply chain, and in it you can go in and map out all the waste and how to optimize your distribution. which is taking a huge amount of inefficiencies out of businesses. And so I think people have to see it from yes, it's coming from government, this is going to be mandatory, you're going to have to report out on this, but if you're a procurement manager making better decisions for your business, ultimately to take cost out of your business, to optimize how your product is being distributed or what you're wasting through those supply chains, there are solutions today that can really help optimize your business, and I think that's it's not going away. So, is there a downside to it? I think if you can have a great business case that can improve your margins, I think there's a great investment opportunity.
Yeah, so it's, I guess, the idea, it's also maybe a mindset where some investors or some companies still feel that, it's somehow, or investing in social impact or investing in ESG is some sort of form of charity where actually it can also help your bottom line, or actually will probably help your bottom line, and it's a profitable decision as well. Maybe one question also, or maybe to stay with Rhea, is there one particular innovation, climate tech, that you're very excited about? That your company has recently invested in, maybe?
Yeah, I think what I'm most excited about, and it comes back to maybe transparency and really transformation of a lot of the industry verticals that we work in, is what we're doing through this, what I call networking effect. And we've invested in a company who I think is here as well, EcoVadis, you may be aware of. I think they've touched over 100,000 different companies. If you think about the impact that they could have by the work that they're doing on sustainability ratings, I think they touch more than 1.4 trillion of spend across supply chains. And I think if we can get more companies, either through something like an EcoVadis, through sustainability ratings, or through other effects, to get this networking effect where you get on one platform, you get the enterprise companies and the suppliers speaking the same dialogue, understanding that there's value in sharing some of the data, and just operating more efficiently. I think this would be transformational for what we're seeing right now in supply chain. So very excited about some of the companies that are ramping up growth here.
Got it. So last few seconds, but same question for Julien. Any particular type of technology innovation you're very excited about that can help deal or cope with this very big issue that we're all dealing with, which is climate change?
I will use a similar example than Rhea did, which is the network. When you are working in the supply chain, you need to create this network. At Sweep, we have big clients, L'Oréal, Banque de France, Électricité de France, and blah, 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 and HP as well. And what is very interesting, it's every company, this one, they want not only to improve their own carbon emission, they want to onboard all the suppliers among the supply chain. Why? Because if you want to tackle the climate change, it will not be an individual matter. It will be a collegial matter. So if you are not able to connect everyone, the suppliers with the big account, with this technology, then you will not succeed. What is very important is to understand that your carbon is my carbon, all among the supply chain. So if you are not able to connect everyone, then it will not be possible. And at the end of the day, it will be a big mess because the regulation will come, and the regulation will put the responsibility first on the investor, and be sure that at the end of the day, usually you are speaking in a very, very friendly way to your bankers or to your investor, or the responsibility will be on the shoulder of the big account. And once again, you are speaking in a very, very friendly way to your seller. So you will have to do it now. It's time to do it for our society, but for sure we need this collegial approach and not only individual one. I think it's the most important things to keep in mind.
Definitely. Okay, I want to thank you both so much. Thank you, Rhea. Thank you, Julien. We have to wrap up. Thank you for the audience for being here. And I hope you enjoy the rest of the conference.